Thank you, everybody, for joining us today on this special webinar with three of our great friends in the RIA money management community with slightly different views, each of them, on Bitcoin, on digital assets, on the future of money. You know, what we really wanted to do, we've had several launch calls to talk about what we're doing in the space, but what we really wanted to do was have a very balanced conversation about what's happening in the digital asset space, the future of money, the idea of some of these assets as hedges against things like inflation or being stores of value, as some people tend to call them. So we're very excited to have this conversation and really have an intellectual deep dive into what's going on with Bitcoin and, again, what's going on in the digital asset space as a whole. And we're joined today by, again, three of our great friends in the RIA community with differing views on the space. The first one joining us today is Carrie Firestone. She's a CNBC contributor, as a lot of you may know. She's the co-founder of Aureus Asset Management, serves as the chairman and CEO. And I think it's interesting, she began her career working under the great Peter Lynch, who had the axiom of invest in what you know. And so I think that in a lot of ways, I don't want to put words in your mouth, Carrie, but informs her views on the way she invests. She likes to have her arms around things that she's putting her and her clients' money into. And so I think she comes with this from a very interesting perspective. Andy Edstrom is a financial advisor and a member of the investment committee at Westcap Group. Andy has written a book about Bitcoin and about digital assets and is very much a Bitcoin bull. So he brings his perspective on why the macro background, in his view, is bullish for Bitcoin. And then our third panelist today is Tom Trinan, who's the president of Red Hook Management. He began his career at Morgan Stanley as a real estate analyst. And I would say he is crypto positive and crypto curious himself, but maybe not as deep into it as Andy is. So we have, again, three people on different parts of the spectrum here as it relates to Bitcoin and digital assets. So very much looking forward to having an intellectual conversation about what's going on in the space. And hosting today's talk, as most of you know, and probably needs no introduction in this forum, is Anthony Scaramucci, the founder and managing partner of SkyBridge. So without further ado, and you don't want to hear any more from me, let's dive right into it. Anthony, you take the reins.
John, thank you. I appreciate the opportunity to see everybody. And I think you accurately described what we're trying to achieve is basically varying views. We have Bitcoin skeptics, we have Bitcoin evangelists, and we have Bitcoin investors. And so I would describe myself as a Bitcoin investor. I'm not an evangelist by any means, but I believe in the asset class. And I think I've done enough analysis to explain to people why we believe in it. But I'm also interested in hearing Bitcoin skeptics, and there's many of those as well. But I want to start with Andy, if it's okay. And Andy, you got your book in the background, so I love that. As everyone knows, I'm not that self-promotional. Okay, I'd have the book plastered on my forehead, of course. But the book, Why Bitcoin, it was an excellent book. I downloaded it on my Kindle a few days back, and it is a brilliant exposition of why Bitcoin. But you also point out in the book what the perils are and how you yourself had to have a quote-unquote aha or eureka moment. And so tell us what that aha moment was. You write about it eloquently in the book and why you think it's a compelling investment. And then we'll call on Carrie Firestone, whose hair today looks better than my hair, which I'm upset about. We'll talk about that in a second, who's more skeptical than you are. But let's start with that.
Good. Well, thanks, Anthony, for that great introduction. And I'm happy to say my hair doesn't even come close to competing with either of yours at this point.
And it never will, Entrim.
I'm sticking with the COVID cut.
I want to make that clear to you, okay? You got to fight another battle on another hill.
That's right. I'm going to nurse this COVID cut thing for as long as possible. So anyway, Anthony, you asked me about my aha moment. And it was the summer of 2017. And I had done about probably 5 hours, maybe 5 to 10 hours of reading about Bitcoin. And it was newspaper articles, various sources on the internet, et cetera, et cetera. And I sat back in my chair and I finally just said, just tell me how the damn thing works. Because all these articles were sort of high level, they were surface, they were talking about how there's this network in the cloud, in dark places, and it's for moving value, basically for transactions and money. But I finally stumbled upon a TechCrunch article, which explained literally how blocks are constructed. It explains how you take a timestamp, you take a set of transactions, you take the history of all the transactions that have happened on Bitcoin up to that point, and then you take this thing called the nonce, which is this number that is difficult to find, and it is the thing that causes all these miners all over the world to expend huge amounts of energy to solve this problem, to put together a block of transactions. And when I realized that, all that gets hashed together with a cryptographic hash function, and then the next block gets built, and that to tamper with any transaction in the history of the system would change the hash of the entire blockchain, would make it immediately evident, and moreover, makes that, therefore, nearly impossible to rewrite the history. When I had that aha moment of basically how the basic mechanics worked, that was the moment that I realized that, as your former guest, Michael Saylor, I think has put it, this is a nuclear grade resistant data structure. It is the hardest to tamper with ledger that has ever been created. And when you realize that money is a ledger, you start to realize, and I started to realize, how important Bitcoin was likely to be and how potentially valuable it could be in the future.
Okay. And so basically, your book, and I'll just paraphrase quickly, you're basically saying that you have an airtight cryptography and you have an airtight ledger that can be transferred easily between two parties. And ultimately, that is the technology of money, something that each person will accept. And one axiomatic fact about money is that the money, the tender that we're transacting with, is always, axiomatic fact, less than the goods and services that we're trading for. That could be a seashell, that could be wampum, it could be a gold coin with the stamp of a political profile, of political figure's profile on it, all of which are relatively worthless to what we're transacting. And I'll just make the case more vivid. You have electronic digits in your bank account. You're going to wire them over to the Mercedes-Benz dealership for the G-Wagon, the AMG version, of course, Andy. And you're going to send 180,000 of those digits over to them. It's an electronic transfer. And then the G-Wagon shows up in your driveway. So we have historically been used to transacting that way. Yet a skeptic could say, well, what the hell is that? I can't melt it and turn it into jewelry. It has no government backing. It has no army. So, Carrie, what gives you pause when looking at the asset class?
Well, first, Anthony, thank you for having me. Thank you for the compliment on my hair. When you can come up to Boston someday, I can get you an appointment with Najee also.
And I want that. And by the way, for all of you out there who think that that was sexist, me remarking on Carrie's hair, it was not sexist, not whatsoever. I'm just complimenting her hair. And I was hoping that she would return the favor, but of course she hasn't. And that's fine. I can live with it. Okay, I can live with it.
You look great.
I'll tell my therapist later that I was fishing for a compliment and didn't get one on a live Zoom call. But Carrie, tell me about the skepticism and what gives you pause looking at this asset class.
Okay, let me explain three things that I am somewhat skeptical about. And it's not as if I think Bitcoin is never going to work. I just have questions. So on the issue of whether it's a hedge against inflation, in the years that Bitcoin has been established, there has been no inflation. We have had a period of very, very modest inflation since 2008, despite having an enormous increase in the money supply. We had quantitative easing in 2009. We have had floods of money to the system over the last few years, particularly in the last year, and there just hasn't been inflation. So increasing the money supply has yet to have an effect on inflation. Bitcoin has gone up, of course, but we can't tie it to inflation. Not enough data points there. Number two, on the question of Bitcoin as a currency for transaction, there have been very few transactions that have happened with Bitcoin. We know that there's about 4.5, some people say as much as 10 transactions per second with Bitcoin. There are 1,600 with MasterCard. And if you look at Visa, American Express, et cetera, which each have the capacity to do 60,000 a second. Again, we don't have evidence to say that it will be a good transactional currency. And the third is issue of security. I understand it's very secure. I know we're going to have Andy repeat for us exactly what he said about that blockchain, because I missed a couple of points. But is it really a question that people who have a lot of money have no security? I wonder if Bill Gates or Jeff Bezos have ever felt as if their money was not secure. Is their equity in their companies not secure? Is their cash, wherever it is, investments? Is there such a problem with security of the dollar or in established currencies? I mean, I wonder about that. I get it, it's secure, but do we really need that level of security in 2021? So those are three questions that I have right now.
Okay, and I think those are legitimate questions, but before we let Andy rebut that, we've got Tom, who's somewhere in the middle. And Tom, basically, I would say you have a constructive view on Bitcoin. I want to ask you a provocative question, and then I'd like to hear your view. If I were Jerome Powell and I raised interest rates from 0 to 10%, what do you think that would do to Bitcoin? And then secondarily, what is your view of Bitcoin overall? And you can go back to our zero interest rate forever environment, but I think I'm trying to make a point.
Yeah.
That is the environment that's creating this sort of buzz around Bitcoin.
Well, I think long term, it hurts Bitcoin with an interest rate that's as high as 10%. We just haven't seen that in a long time. And many of Kerry's points are important because we've been in a pretty stable environment with low inflation and low interest rates during Bitcoin's entire life. So I would say that would be a challenge to it. People would be looking for assets that would have a return of value, an interest rate, a current return. And Bitcoin today, just like gold, doesn't have an interest rate. And it's really growing mostly because it's becoming a newly accepted asset class, much like all the other currencies. We don't really know where it's going to go. And I think that's where the opportunity lies. And so transitioning to your second question, Anthony, which is how do I see it as a part of a client's portfolio? We're an RIA that tries to work with people that have $5 to $50 million. And clients like those have enough assets to entertain things that are interesting, entertaining, don't always make perfect sense right away. Leap of faith might be required. We have plenty of clients with less than $5 million, but I'm not sure that this would be an asset that we would, I've talked to them about it, but it's really for people that have some flexibility. Typically what we do is we advocate for a core portfolio of well-diversified global equities, low-cost ETFs and mutual funds. But we also have a 5 to 15% alternative sleeve. And that comes in the form of some, mutual fund hedge funds, some private equity, and then, real estate holdings. And Bitcoin, I think, would fit into that bucket. And what I've been talking to clients about is an allocation of 1 or 2%, maybe not at this level where we've come pretty far pretty fast. Maybe start a little bit lower than that. Give yourself some dry powder to add if we have a retrenchment of price, but start and get the experience of being a Bitcoin investor. A lot of the uncertainty is what sets up the attractiveness of this. I think this is an asset that has stood the test of time. It's proven that blockchain works. It's gone through multiple cycles. And it's exactly that risk reward that we are at right now that I think that some people that have assets that are interested in playing, I think that if you don't talk to them about this, in the 5 or 10 years when it becomes something, it's going to be a head scratch for them. They go, well, how come we didn't talk about that? How did I lose that opportunity? So I'm in favor of talking to clients about it. If it fits for them, that's great. And one of the things that I do talk to people about is putting it in an IRA or a Roth, where they're putting it away for 10 years. A Roth is an inheritance vehicle for the wealthy. they might not need, they might not liquidate that asset for 20, 30, 40 years. So lots and lots of room to grow.
Let me jump in for a second. Before I get to Andy, I want, Carrie, if you don't mind, and please respond briefly so we can give Andy some time. Let me throw this out there because Tom's saying something that I would worry about if I were an FA. It may or may not be right about the maturation of Bitcoin, but it is directionally going in a direction that feels like Metcalfe's law, and the network effect is taking place. And so there could be a situation where it's included in our portfolios in terms of us being measured by it, meaning we may have a 60-40 portfolio today, but maybe now 5% is carved out for hedge funds, or 1 or 2% is carved out for gold, and will eventually 1 or 2% be carved out for Bitcoin. So then as an FA or somebody that's responsible for keeping people wealthy, making them stay wealthy, are you effectively short Bitcoin by not having it in your portfolios? What's your reaction to that, Carrie?
Well, that's a good question. I think my answer would be we are not at a point in the maturity of Bitcoin so that it's part of an established asset class that needs to be considered for a diversified portfolio. It's still considered a speculative asset. I think it is one. And it has a correlation that's much higher to the S&P or the technology index of the S&P than to anything else. It's not correlated with gold particularly. It has an inverse relationship with the dollar. I think that we would all accept that it would. But it's as a market capitalization asset, it's relatively small, very small compared certainly to gold and also other types of equities worldwide. So I don't think we're there yet. On the other hand, I don't think it's a bad idea to ask people how they feel about this as an alternative. You have it in SkyBridge. The accounts that, we have money invested in SkyBridge, and there happens to be Bitcoin there. I didn't ask for it. It's there, and one has to just sort of weigh that, measure it. It's not something I would make a decision to invest because I don't know it well enough. I presume you and your staff know it extremely well.
Yeah, and remember, we put a small piece. It just happens to be we've had some good fortune and good timing. So our cost position is less than 5%. Our overall position has grown as a result of appreciation. But pursuant to the themes of SkyBridge, we did something similar in 2011 with gold. We've just chosen to put that theme in Bitcoin, given what's going on in the macroeconomic dynamic of the proliferation of fiat currency, which we're going to get to. But let me turn to Andy. So Andy, now put your institutional hat on. You got to convince Carrie Firestone and her team that you're there. And if you're not there yet, that's fine. Tell us some of the inflection points, the crossover points that would make somebody at Aureus Asset Management comfortable with it being a mature asset and something they really need to consider to keep their clients wealthy.
Yeah, happy to do that, Anthony. So I guess the first thing I'll say is Carrie suggested that it's a small asset class, maybe too small to be important. I would say that perhaps only in a world of quantitative easing and 20% plus growth in the money supply in M2 does a $1 trillion asset. That's it with the T. Bitcoin approximately has $1 trillion worth of market cap at the moment, or network value. Only in that kind of a world does $1 trillion asset look small. Yes, it's smaller than gold. That to me is the market opportunity. But I would say that at $1 trillion of market cap, Bitcoin is no longer small. Second thing I'd say is by the end of 2019, over a year ago, Bitcoin was already the best performing asset in terms of total return, really of all time, at least as far as we can measure it. And regarding the correlation data that Carrie presented, the numbers that I ran in my book, which are admittedly now, 15 months old, indicated that Bitcoin has less than 20% correlation, to all of the following: gold, the S&P, foreign stocks in the form of the EFA, emerging market stocks, bonds as measured by the Barclays aggregate. So less than 20% correlation in my book as a portfolio manager is pretty good, especially when it's the best performing asset class ever. And then the usual criticism is, well, but what if it's just a giant bubble or something? And to me, the answer to that is when you realize that it's continuing to take share from hard money assets like gold, which is still 10 times the size, and probably will take share from fiat and offshore assets and other categories I can talk about, then really it's pretty hard to ignore. Now, to your question, Anthony, about what signals or indications am I looking at? I mean, it's hard to ignore the fact that Elon Musk, who runs now one of the most highly capitalized companies in the world, that's Tesla, has come out positive and recently bought $1.5 billion worth of Bitcoin and put it on his corporate balance sheet. Now, he took the playbook, obviously, from Michael Saylor, with whom you've had some great educational content that you've put together. And so, yeah, it's showing up on corporate balance sheets. That's huge. It's getting normalized in terms of the investors that are adopting it. I won't go through the laundry list of genius hedge fund managers, macro traders, investors that went public about buying it last year and so far this year. But there's no doubt that it's getting adopted. The sentiment has shifted. And then the last thing is regulatory. Please give me some bad regulatory news for Bitcoin. All I'm seeing is people that understand it getting put into positions of power, whether it's at the SEC or the CFTC. And I see basically it getting normalized and folded into the community, into the financial system. So all the recent events, I would say the last year, are positive. And as to, what more events do we need? I don't know. Do we need a central bank to go public about owning it? I mean, there's not too many, I would say, classes of investors that haven't yet started to adopt it, but we're early in the adoption curve. And that to me is the upside.
So Tom, Andy is compelling. Gary, I'm like the Chief Justice of this tribunal here. So I'm guessing Gary hasn't bought into that. She's probably heard a lot of that before, but she's still a skeptic. And while she's accepting the $1 trillion number as being a big number in the scheme of $60-70 trillion of global assets, she's still willing to wait. And again, she's getting paid to keep people wealthy. You are too. You're not getting paid to invent a unicorn or to put them in a unicorn. So what are the risks to the Bitcoin story? What do you see as a risk? And by the way, I'm assuming that all of you read the Wall Street Journal op-ed today that was talking about Bitcoin and the risk there and the potential that there is value there. What do you see the risks being, Tom?
Well, in some ways, the risks themselves are just the unknowns of the future of an asset class that, while 12 years old, it is not mature. $1 trillion aside, the only reason we're in it is because we think that it has a long way to go. And those risks are the things that people are pushing on and testing. And we've talked about a lot of them already. So I would say top on the list, and this is not a US idea, so it's a global idea. So some of these risks come from the United States of America, but it's global, and our global world is changing in many ways more in the last 4 years than it has in the prior 50. But regulation remains one of those risks. I don't want to go too deep into it. I don't really see that as a huge risk, but it is one. I also see, similar to regulation, the idea that sovereigns come out with their own cryptocurrency to compete with Bitcoin. I have a friend who works in the industry, knows what's happening, knows that the Chinese are working hard, on a crypto yuan that. I don't know if it's going to be a stable coin or it's going to be a store of value with a limited number of coins. It's unclear, but he impressed me with their seriousness about it. So, just like that, the United States could come out with a competing similar instrument. I suppose that there could be another kind of coin similar to Bitcoin, but behaves better. Bitcoin is, as Carrie suggested, is not really good for transactions. I kind of like that about it. I kind of like the fact that it's kind of in the corner of store of value, and that other coins can fill that need of quick transactions and different kinds of transactions. I know Ethereum is built for that. Litecoin is supposed to be for online transactions. So, but it doesn't mean that there can't be another competitive coin. Is that terrible news? Most major industries kind of settle around 3 competitors. Bitcoin has the advantage of being the first mover. Is that going to make it the only mover? I don't know. Kind of feels that way for this purpose, but again, it's a risk. The other kind of longer shot risks are there is a software hack, that somehow blockchain, gets infiltrated in some way. Don't really see that. It's been 12 years. A lot of people spend their time trying to hack stuff. Hasn't happened. And we've lived through the illicit use of Silk Road, and I don't see that as a major concern. And then the last one is, here we are at $1 trillion. Maybe you just get the value wrong. Maybe it's not $1 trillion asset. Maybe it's a $500 billion asset. And it just, we all think that the value of gold is a decent, long distant idea that it will replace gold, but we could be wrong. But I don't see any one of those as a singular fear. They all together, I think they could chip away. But I'm talking to my clients. I'm advocating for those that are interested to put them in them. So none of those are scaring me away.
So, I appreciate it. I think it's a balanced view. I think Andy could probably, if you read Andy's book, which I would encourage everybody on this podcast to read Andy's book, because I think you'd have confidence in the cryptology and an understanding of the machinations of the cryptology, that it is the reason why in 12 years it hasn't been hacked. And I think it would give people confidence. But let me turn to Miss Firestone, because now I'm going to be her advocate here for a moment, and I would like her to either agree or disagree with me. There's no risk to you to avoiding Bitcoin. Let me be the devil's advocate and say, let's say you get it wrong. Well, there are many people that got Amazon wrong. If you put $10,000 into Amazon on its IPO 24 years ago, May 15th, 1997, it's worth $21 million today. Let's say you missed that. What's the big deal? You've managed your clients' money brilliantly, and they've managed to stay wealthy, and you've got a big account base. Let's say you missed the return of Steve Jobs and the ascension of Tim Cook into Apple. Big deal. You've managed to find your way. So there are more risks to getting Bitcoin wrong, though. You could be buying Bitcoin at 47,000. Something happens and it trades to 10,000, and now you have egg on your face. And so is that part of the decision-making that's going on? Carrie, tell us about the matrix in your mind in terms of protecting clients, being a healthy skeptic, but also providing them with opportunity.
Yeah. So the most important thing for us in investing, when we do direct investing, and I would think that Bitcoin would be, if we did more than just invest through a fund like yours, if we put it in a portfolio and we own 35 positions, that's the way we do it at Aureus, and we have for 15 and a half years here, we know a lot about every one of those positions. And it's valuable real estate. And if we gave one of those slots to Bitcoin, and we didn't know it extremely well, and it went down, I would think that would be a real disservice to our clients. Our clients would expect more from us. I expect more of us. And that understanding of the asset is something that, I'm learning. I read every piece that was on your website. And I have been reading about Bitcoin for years, and I've seen it go up and down. In fact, Bitcoin wasn't $1 trillion 6 months ago. It was I read a piece when it was 300 billion, and then it was 600 billion, and now it's $1 trillion, and it could be 2 trillion soon. But remember, if you add up Apple, Google, and Amazon, that's 5.5 trillion. I mean, these numbers get very big fast. It's amazing how few entities are in the trillions. So we have to know what we own. We don't, for example, on the question of how can you outperform the market, if the S&P is the benchmark for the portfolio that we run internally, and we manage over $1 billion in that portfolio, but we have money invested elsewhere for clients. We have never owned something, as I said, that we don't understand. If you ask the people who are buying CrowdStrike, Snowflake, Trade Desk, or Bitcoin and have bid up the prices of those stocks enormously, and Bitcoin, exactly what do those businesses do, and explain Bitcoin to me, they couldn't do it. I'd love $1 for every person I would ask who's an owner to explain it to me. And I think that's not what we have to do. We don't need to know the answers on every single company. We just need to know the answers on the ones that we own and beat our benchmark. That's the job. That's our job. We've continued to do it, and I think we can continue to do it. And if at some point we know Bitcoin well and feel strongly enough about it and feel good about the price, then we could be a buyer of Bitcoin. And last thing, very fast, Anthony, can I just tell you that Elon Musk wants to take your Bitcoin in exchange for cars? Cars are depreciating assets. He thinks Bitcoin is an appreciating asset. I'd like to know if he is buying components for those vehicles with Bitcoin. I bet he's not.
Okay, so make the point more clearly. So you bet he's not, and so therefore
appreciating. He wants it to be his appreciating asset. He would like to accumulate other people's Bitcoin. The way to do that is to say to them, "Oh, you can buy this Tesla with your Bitcoin," but I don't think he's giving them up. He's a big bull on it. He's trying to hoard. He's trying to get as many Bitcoin as he can.
That's making the bullish case.
Yeah, of course.
So you like that aspect of it then? That's a part of the fact set that you would give you pause and say, okay, he's a pretty smart visionary guy. And so therefore that's a data point that you like in the bull case for Bitcoin.
But let's not mistake it for him wanting to start doing lots of transactions in Bitcoin. I don't think that's it. He just wants to acquire them and keep them.
Well, but I also listen. I mean, we're all reasonably well-heeled and experienced in this business. For me, when I watch those candlesticks moves, $9,000, $10,000 candlestick moves in Bitcoin, it does feel like there's some short squeezing going on. Andy, I'm interested in your take there. Where do you think we are in terms of the adoption cycle, the maturation cycle? And since you're the bull here, the more bullish than others, where does Bitcoin go from here in your mind?
Yeah. Okay. So a couple things to say there, Anthony. The first is, as we're having this conversation, Bitcoin's price has hit an all-time high. So we're at a new level here.
So we're going to keep talking until midnight. I just want everybody to know that on the podcast. We'll be with you at midnight. John Darcy will be serving coffee. It'll either be Dunkin' Donuts up in Boston or Starbucks out here in Manhasset at 11:30 p.m. But keep going, Andy.
That's right. We got to do this Jerry Lewis style marathon and never stop. I think one way to frame this is, I want to say a few things about what skeptical investors are saying. Okay. So here's a few things. One, it's a bubble. Two, it's just one competitor among many in the field. Three, it only has a few million users. Okay. Four, it's used for crime. Five is it won't be able to scale up enough to grow into its current valuation. And then six is it doesn't generate cash flow and probably never will. So what am I talking about? Well, it's 2005 and I'm talking about Amazon, okay? Amazon has recently suffered a bubble and a bust in which it lost 90% of its value. It still has plenty of online retail competitors. It has only a few million monthly active users. It's regularly used to illegally evade sales tax. It seems unlikely to grow into its valuation. And then lastly, it generates no cash flow. Now, Amazon at that point was about the the age of Bitcoin today, right? Amazon now is well over 2 decades old, and Bitcoin is about a decade younger. So I see today, in terms of its maturation and development, I see Bitcoin pretty similarly to Amazon in 2005. It's already pretty clear that it's the winner, and yet most investors haven't, really peeled back the onion to understand the growth potential. Myself included, by the way. I missed Amazon in 2005, okay? I found myself getting to the benchmarking issue, buying it at much higher prices much later for my clients, for myself. Now, we're all free to choose our own benchmarks. I actually do believe that in the 2020s, we will see likely an inflationary environment. And I believe it's going to be critical to own hard money assets. And for my clients, that category, that asset class includes gold, and it includes Bitcoin as well as other monetary metals. As far as the potential, I mean, as you know, Anthony, the upside price target I put in my book was $400,000 per Bitcoin. I have to say my upside case is now higher than that. If you really want to think about the potential, the market cap of gold, which is 10 trillion, is fairly obvious. Bitcoin's likely to take a growing share of that over time. But if eventually, I don't know, 5-10 years from now, we actually are using Bitcoin to transact, then it's likely to take share from fiat money. It's likely to take share from offshore assets because it's hard to confiscate and it's hard to censor. It's hard to stop people paying with it. And then there's a couple other categories in there, which is, it could take monetary premium from much larger assets like real estate. What is the difference between holding some Bitcoin and holding your own private keys and owning an apartment in Kensington in London that is not rented, that is not occupied, that just sits there as a store of value? And the difference is the UK government can easily take your Kensington apartment, but it's harder for someone to seize your Bitcoin from you. So these are all potential upsides. You probably won't believe me if I tell you the honest truth about what I see as the potential upside for Bitcoin. I see it on the order of $100 trillion over, let's say, a decade or two from now. So we're talking enormous, enormous upside. Just like Amazon stock from 2005 to today made, I don't know, a 50x or 100x. I think the same could be true for Bitcoin in the long run. And it is incredibly volatile, and that continues to make people's faces melt and their heads explode. But I do expect that over time, the volatility will reduce. I do not expect many people to use Bitcoins to buy Teslas because, as Carrie rightly pointed out, and Anthony, you pointed out, who wants to part with Bitcoin if we expect the value to go up? But I guess those are my thoughts for you.
Okay. I mean, I think it's a fair. We're having a look at this. It's almost like the Fox News channel. Okay, we're having a fair and balanced discussion on Bitcoin, right? Just like Fox. So Darcy, we have a millennial with us. Okay, I'm going to show my age and confess that millennials may know more about Bitcoin than us baby boomers. So John, what have I left out? Come into the conversation.
Sure. Happy to do it. We have some great audience questions too that I want to sort of help moderate those and make sure we get those answered. So an anonymous attendee has asked about inflation. So and we've talked about potentially some people think Bitcoin is an inflation hedge or a hedge against central bank irresponsible money printing and things of that nature. Carrie, I'm going to talk to you about this because I know you study economics very closely. Are we having inflation right now? So you have college payments are up 25%. This is an audience question. College payments are up 25% year over year. Real estate in certain cities of the country is almost unacquirable at this point, given how hot those real estate markets are. Miami Beach being one example that the attendee used. And ribeye steaks, he says, are up 40% this year. Do we have inflation, but it's not measured in the traditional sense that we think about CPI and inflation?
It's a very good question. Let me just tell you it in two parts. One relates to COVID. So there is some pandemic-related inflation. So let's take, the price of beef. I think that there have been big supply chain problems where people who work in processing plants, perhaps ranchers or people who work transporting cattle, have had effects of COVID. And so there's a diminished supply, and that ends up causing a lot of inflation at the consumer end. Restaurants aren't buying it. They stopped producing for restaurants. Then there wasn't any for the grocery stores, So there's been many COVID-related inflation pockets, maybe even bubbles, but there just isn't a lot of inflation in the overall system, and there hasn't been. I would say the reason, and there might be, of course, there might be, but if we think about briefly, and I've used this a lot, what happened after 2008, after the financial crisis, everyone predicted there would be inflation. Everyone said, well, not everybody. I actually talked to a professor. He was a retired professor I had years before. And I asked him this question, and he had been on the Council of Economic Advisors back, I think, with, Johnson. And he said he didn't think so. I said, please explain why. And he said, it's because there's too much slack in the system, that we had geared up for big growth all around the world for a decade before 2008. Now no one was using all of that capacity, and it was going to take many years to start to remove that slack. And until we do, and there's a lot of slack right now, labor slack, manufacturing slack, service economy slack, until we get through all of that so that the demand really exceeds that available supply, we won't have inflation. So that's our feeling is right now, I don't think you've got any risk of inflation.
So Tom, I want to turn a question to you from Gerardo in the chat. He's asking about, so let's say that scenario that Andy laid out where Bitcoin is worth $100 trillion. That's the network value or the market cap of Bitcoin. Are you worried about the Federal Reserve, once Bitcoin gets big enough to threaten the sort of global reserve currency status of the dollar and all the side effects that could have on the U.S. economy? Are you worried about that scenario where regulators might come in a heavy-handed way and ban Bitcoin?
Well, I mean, 100 trillion is a completely different scenario to consider, right? It would be tremendous success. It would take.
Let's say 10 trillion. Let's do something a little bit more intermediate. Some just peanuts, 10 trillion.
Yeah. Well, I think what you're asking is what is the risk of regulation?
Yeah.
And how are sovereigns going to react as Bitcoin, impedes their power or threatens their power, or you have nations maybe ganging up, or maybe you have a Euro version to competing against the United States. Or I think probably what most people would be concerned about is what I mentioned, the Chinese yuan, digital currency that might threaten the dollar as the reserve currency. So it's hard. I mean, I think that that's something that you've got to think about. Hard to assess that risk. My sense is that as time goes on, and you're looking at your portfolio, it's not these things aren't going to happen overnight. Status quo is very, very difficult to manage. I mean, you watch our country over the last 4 years change dramatically, yet there's much of the status quo that kind of still exists, and so. Legacy laws and practices are difficult to change. It may mean that if you are a Bitcoin investor and you run it up, you may not get out at the top. But if you're an active investor, it's almost impossible to pick the bottom or to pick the top. I would say that even at your reduced number, the $10 trillion level, as an investor in that position, that would be a good problem to consider, when to get out at that point. But I do think the question is a good one. It could mess with global rhythms that exist today.
So Andy, Owen in the chat has a question about, what if I forget my password to my Coinbase account, or I lose my key to my self-custodied crypto? What are the risks associated with owning and custodying crypto, and how do you mitigate those? And what are different options that exist out there for investors who want exposure to Bitcoin but are nervous about housing their Bitcoin on an exchange or trying to self-custody it?
Yeah, that's a great question. So the answer to your second question, which is if you actually lose your private key, the answer is you're toast. It's gone. It's a bearer asset. If the key is lost, unless and until there's a revolution in cryptography, that asset is lost and gone forever. Now, when you use a third-party intermediary, you mentioned an exchange. Likewise, SkyBridge's fund. There are other options, many other options out there. From funds to exchanges, to basically, retail and institutional products, like one that I invest in called Swan Bitcoin that do this for you. You're entrusting those guys with your keys unless and until you want to withdraw your Bitcoin. So the consumer can choose. The consumer can choose to put it with a third party. This has been a major area of development in the space. I think the news I saw was that, was it SS&C? It was one of the major custodians just got into the Bitcoin custodying business.
Bank of New York Mellon, America's oldest bank.
Thank you. Boney got into the game. Fidelity's been in it for a long time. Prime Trust, Coinbase obviously does it. There are actually quite a few qualified custodians now who will hold your Bitcoins if you want them to. Now, if you choose to take things into your own hands and custody your own keys, there's a whole range of options out there and more and better options as well. There is cold storage on hardware devices, which are basically, something that looks like a USB drive that is protected with a password that allows you to keep your key offline and only connect to the internet occasionally when you want to use it. You can use things like paper keys. I mean, if you want to print the key out and put it in a safe place, you can do that. I don't recommend that. At least you ought probably to cut it into a few pieces, maybe duplicate it, have some redundancy.
Tattoo it on your arm or something.
Yeah, that might not be advised.
You don't want to do that because you get kidnapped and they take the key off your arm.
Yeah. Now, I would say the best in class structure for custodying of private keys, whether it's at the individual level or at the institutional level, is multi-signature schemes whereby you need multiple pieces of information or multiple devices and multiple parties who must approve any transaction and any movement of Bitcoins. That way, you can have sort of a 3 out of 5 signature scheme. So if you lose 2 pieces or 1 piece, you're still okay because you have 3 out of 5 of the majority. What's amazing about Bitcoin is all of these options, various levels of security versus ease of use or speed of transfer, which is a trade-off. All of these options exist along the spectrum. And because it's computer code and because Bitcoin has enough functionality built into the code, you basically have your choice of options, which range from extremely secure and extremely hard to access, which is generally what funds and products like SkyBridges do, to much easier to access, lower security, more likely to make a mistake or get stolen from. And you can have some in the easy access category, some in the hard access, and everything in between.
So I have a quick.
Go ahead, Anthony.
Before you, just a quick question for Carrie. I'm a high net worth individual. I've made a tremendous amount of money. I'm coming into your business practice. I have a stock and bond portfolio, but it needs care. And, I've got $100 million of net worth, but 15% of my net worth is in Bitcoin. I bought the coins early and I've got them. What are you recommending to me that I do?
Wow, that's a nice portfolio, Anthony. I like that account. We haven't had anyone come in with a lot of Bitcoin. However, I think that you have to pay a lot of tax. If you've got Bitcoin you bought years ago and you have $15 million or more of it now, God, an awful lot of that is going to be taxed. So then you have to decide whether the tax on capital gains is going up. And you have to sort of balance whether the potential appreciation of Bitcoin over the next few years will offset the rise in the capital gains tax. So that's kind of a math problem. where you have to play with various scenarios. And so I don't think that I would suggest, definitely not sell at all. We would keep a certain percent of it. I'm just not sure how much. Whoever bought it years ago has to be pretty enthusiastic, had to be at the time, to have held it through the ups and downs, because it's been a volatile asset, right? It hasn't just been straight. And they've hung in there.
So you're intellectually, because now the person is going to be your client, and it affects your portfolio performance. Obviously, people are going to be leaning on you, and ultimately you're taking this over. So in some ways, you're going to own the performance of it. And so you're more or less saying that you're open to, because you customize accounts for clients, you're open to the idea of holding Bitcoin in that scenario.
Yeah, I think that I would be. The way charts work, and everyone at Fidelity, we're a fundamental, the company, it's not we anymore, it's them now, but a great fundamental research organization, and everybody was a closet technician. Everybody studied charts at Fidelity. And what you know from charts is that when a chart's going up, particularly when it's parabolic, it can keep going up. But once it peaks and it starts to go down, sell some there, because then you have no idea how far it's falling. So as long as Bitcoin is up on that slope, sharp and to the right, you keep with it, and you don't sell it until it turns.
Well, we're going to keep talking till midnight, because Bitcoin is at an all-time high. John Darcy, why don't you finish us off? Okay.
We didn't get to every question in the chat, but thank you everybody for being so interactive on this conversation. We really enjoyed it. And thank you, Carrie, for jumping in here and being sort of the skeptic who came in and argued in an intellectual way about why you're still hesitant.
Andy, hold up the book. Okay. I'm trying to teach you how to be self-promotional. Get the book in the window there. Okay. There you go.
Thank you, Anthony.
Keep going, John.
Yeah, but if you have additional questions that we didn't get to, you can email us at bitcoinir@skybridge.com. And we like to be a resource for people, even if they're not doing business with us, to be a resource for people to learn more about the asset class, because we think, adoption is increasing. And as adoption grows, we think, the network obviously becomes stronger. And in some ways, Bitcoin becomes even more compelling. So we had questions about altcoins, so things like Ethereum and other coins, about what our views are on that space, things about the Lightning Network, which is built on top of Bitcoin as a payment infrastructure, using Bitcoin for international payments. So please, if you have questions that didn't get answered during this chat, please send us an email, bitcoinir@skybridge.com. We'll either try to answer them ourselves, or we'll send you over to Andy to dive into his book and some of the stuff that he talks about there. So thanks again, everybody, for joining us. And thank you to all of our panelists for joining us today. We hope to see you all again soon, maybe on a SALT talk related to digital assets, or another topic, or another one of these Bitcoin conversations that we're having.